What a bounce for crypto. Look at this Bitcoin chart, 13%. You go to something like Matic. Did you see Matic? 50% or so bounce to the upside, alarms going off in my head, screaming at me, my mind screaming at me. Don't be fooled. Be careful. Remember how this crypto game works. That's what we're going to talk about in this video. We're going to dig into this chart, the dip that Bitcoin had below the 786 line. If you're unaware, we've been talking about the 786 line for years. This is a massive macro cycle that Bitcoin bottoms out below these yellow lines historically on the Bitcoin charts. I want to say this is data. There's no guarantees to what we're breaking down here, but I'm telling you what's happening right now in this crypto bear market. The alarm is going off for me, and I want to break down exactly why that is. So we're going to actually start here on the daily chart. First thing to note, we did dip into this below the 786 line. This is the wild ocean of crypto's bear market. This is how I like to see it. It's the wild ocean of the bear market. And I think in regards to the raging sea that we can call it, I think there's more in store. I think we're going to get tossed around a little bit. And that's just my opinion. Everything I'm discussing is how I'm viewing things, how I see things, how I'm approaching these markets. So it's a very good thing. And we talked about the possibility that after this dip, we're kind of exiting the raging sea and we're getting back above the 786 line. But we need to be extremely careful because it's so nice looking at 50% moves. It's so nice opening up your crypto portfolio app, whatever you're doing to track cryptos, and you're seeing all of this green. I mean, we've been accustomed and mentally trained. When we see any green candles, we just get hype. It really doesn't matter if it's a bear market or a bull market. When we see 10%, 20%, 30, 40, 50% green days, we're going crazy. We're getting pretty hype, but that's all emotion, everybody. You need to be very careful. So let's dig into the data and let's really talk about what is happening right here. So if we go to Bitcoin, first things first, just from a simple zoomed in, and we're using Bitcoin as a roadmap for all of crypto. I am, at least, for all altcoins and everything going on in the market. We know what happened with this triangle, and this is entirely in play still. We had the breakout to the upside, which we anticipated. We anticipated the throwback to the trend lines to test. We got it. And then we broke below. That was the move that tossed us into the raging sea. Now, if we look at Bitcoin now, what are we anticipating? It's the same exact thing as we have these trend lines still in play. We're anticipating Bitcoin to test the trend lines, right? So right now, even on the daily chart, Bitcoin not even testing kind of this confluent range of these two trend lines right around 18,500. Right? So Bitcoin's getting very close. That's the first thing on the zoomed in charts that I will be monitoring today. Now, the other thing is, probably this is more important, if we start zooming out on Bitcoin, what's going on? So we have wicked on the weekly chart, and you might just be like, wow, look at that 786 support. And it is true. I mean, look at that. That's 786 wick looking really good. A lot of this off the back of just CPI data. We've been talking about Trueflation, this on-chain Oracle data leading as a leading indicator for CPI data, and it's been falling. So we've been anticipating the possibility that truly the data is coming in better, and today it actually came in lower than anticipated, 7.7 for October. This is great numbers, and obviously S&P 500 reacting very positively. Now, what I want to say on the macro scale is let's zoom out on this S&P 500 chart. This is why we should be really careful. Just putting aside all historical crypto data that says, be careful. Don't get wrapped into the emotionality of pumps and start looking at this realistically. But let's bring in equity markets and let's look at what's happening. If we zoom out, we know we're in kind of this bear market. We've been in this downtrend on the S&P 500. And it's just been a series, just like crypto, of these lower highs, these lower high resistance areas. So from that swing high to swing low, there's our first Fibonacci resistance. Look at that perfect resistance. And then we have from that swing high to swing low, another perfect Fibonacci lower high resistance. And now look at this, another Fibonacci from swing high to swing low, back up to a Fibonacci resistance right here, confluent with this 200-day moving average. So yeah, S&P 500 making a nice move. It's been making a nice move since the end of October. You can see this, but there's resistance in play. There's resistance on the macro. Can we really sit back and say to ourselves, hey, it's all good now. CPI data just came in lower than anticipated, so we're fixed. Everything's fixed. Inflation's good to go. There's no fear of interest rate hikes, and the mortgage crisis is over, and the war with Russia and Ukraine, that's settled now. It's the CPI data that was just released is one piece of good news, and that's good on the micro, on the short term. But on the macro, are we really out of the woods just yet? And that's what I'm questioning right now. That's what I'm just putting into play. That's what I'm trying to infuse into this Bitcoin chart. And so we have that for context. Now, with all of that being said, going back to the Bitcoin chart, let's bring in just straight up technical analysis data. And this is what the data says in terms of this move. Now, I call it the raging sea. And you might be like, wow, that was very short-lived raging sea. One wick below. If you go to the daily chart, it's like we're already out of it. Well, that's what I'm saying. The alarm is saying to me, be careful, Dan. Because what does historical data say? Here's 2015. Here is the comparative raging sea of 2015 that we've talked a lot about. Bitcoin trading in that raging sea for 301 days in the bear market bottom, consolidating, volatile, sideways, amazing pumps like the one that we're getting right now, right? Out of capitulation. You can even see Bitcoin testing above the 786 line briefly in 2015. But all the while, just sideways and volatile, a raging sea getting tossed around. You go to 2018, very similar. The 786 line acting as resistance, you can see throughout the entirety of that bear market, 133 days for Bitcoin. Now you can even see after that first capitulation below the 786, Bitcoin coming up on the daily chart and testing that area. If you go back to the weekly chart, here is a biggest thing on the weekly that I want to note. If we go back and we look at 2015, Bitcoin falling below the 786 line, look what it did. It bounced to the 20-week moving average. And there was resistance in the middle of this raging sea bottom for Bitcoin and for crypto. So I think on the macro, on the weekly chart, we just looked at the daily. I think on this zoomed out chart, this is something we should really take into consideration. So on the daily chart, we just noted that we will look for short-term resistance. What happens? How does Bitcoin interact here at the $18,500 range? It is the trend lines of this triangle we've been tracking. But going to the weekly, we should really be tracking this as well. The resistance area that Bitcoin saw in 2015 when a similar move happened, namely Bitcoin falling below the 786. So that would be the 20-week moving average. 20-week moving average resistance for Bitcoin. 20-week moving average right now, around $20,600, $700. So if we're looking at that area, you can imagine that could get pulled down into Bitcoin a little. Bitcoin right now, if we're looking at price range wise, 15% away from that area. Is Bitcoin going to just this week 15% additional pump out of this low and just test the 20-week moving average this week? I don't think it's likely. Anything could happen, obviously, but more likely might be it just trickles down and Bitcoin does its thing. We have to monitor it on the shorter term charts. But when Bitcoin tests the 20-week moving average, again, whether it's this week, next week, 2 weeks, a month from now, what happens at that 20-week moving average? What actually happens? And will it be anything similar to what happened coming out of the bounce in 2015 below the 786? Will there be rejection, right? So this is a daily chart, but this is the move that Bitcoin saw on the weekly chart. It's just that move to 20-week moving average resistance. So when Bitcoin tests the 20-week moving average, what will happen? That is key on my radar because we know, again, wrapping this all together, looking back at these previous bear market lows, Bitcoin traded below the 786 for 301 days in the 2015 bear market and 133 days in the 2018 bear market. Here we are. We're 1 day in, everybody. We are 1 day in, falling below that 786 line. The 786 line isn't some guaranteed, definite data point that's going to stick, but it's a data point I've been tracking since 2018. I'm not married to it, but I'm just very much, as I watch these charts, it's kind of key. It's foundational to all the data in crypto that we're watching. And it's amazing how it is interacting and working with the macroeconomic world and landscape that we're living in right now. So we're going to continue to track it, but we're one day in. And that's the alarm going off in my head. Don't get wrapped up into the green pumps, the green bounces. This whole move to the downside, obviously from a micro event, which is the FTX news, that's what happened. And now we're kind of coming out of that a little bit, getting some extension away from the 786, very little right now. And that's off the back of what's happening with the CPI data. It's good news. Crypto and the fear that happened yesterday may be starting to subside as that news passes. We saw a similar type of thing with Celsius back in June. We discussed that. And here we are right now. So be very careful. One thing I want to say here is we're going to monitor and track closely all of the resistance that's directly above Bitcoin. I think there's a huge case that Bitcoin, whether it's today, tomorrow, next month, falls back below the 786 line, and we get a similar thing where Bitcoin is just struggling all along this area, right? And it is dabbling and getting tossed around a little bit in the raging sea of this range. And this is the average range of the previous two bear market lows below the 786. So I think that will happen. That's just my opinion. We might never make it back below the 786 line. That could happen. We're going to track it and monitor it. But I do want to say this. If we really zoom out on what's happening here, check this out. This is Bitcoin zoomed out on the weekly. It's a nicest picture of crypto and the growth of the space, the growth of the tech. We're in a bear market. And we're getting very close to the bottom. And many people might argue the bottom is in, the bottom was put in yesterday. Many people might argue that. Doesn't matter. Whether it's here today or the bottom's in 3 months, we're getting close to the bottom in my view. And this is opportunity range. And to really give you a perspective of the opportunity, this is market cap. This is market cap. Well, actually, that's the next screen. This is market cap. So at the top of the screen, it says $897 billion, not even $1 trillion market cap. And then we go over here, and this is just Bitcoin versus the biggest companies and assets in the world by market cap. Just look at this for a second. I mean, at the end of the day, we're all zoomed in on the charts a lot. We're tracking the price. We're seeing these small pumps happening right through these daily moves. But at the end of the day, if you zoom out and you're just like, man, Apple's $2.2 trillion market cap, Microsoft 1.7 trillion. Alphabet Inc., Google, Amazon, Amazon's just below $1 trillion, but we have around 5 companies above $1 trillion or at $1 trillion or more, one above $2 trillion. And right now, the cryptocurrency space as a whole, sitting at under $1 trillion, around 900 billion. And you can even just look at Bitcoin alone, 340 billion. And then you start getting into the altcoins. And this is where it gets exciting for me. Because altcoins kind of acting, and some people, they get a little triggered by me saying this. Altcoins and these startups happening or coming up in crypto acting as these early stage startups. They really are. And they're giving us as just everyday consumers the opportunity to kind of act as like just these speculative VCs in these early stage startups. I really think that. And then you have these cryptos like Cardano sitting at 12 billion. You scroll down and you just you see the story play out. Chainlink, 3.5 billion. And then you go back to this chart and you're just like, wow. And I'm not saying Chainlink's going to be as big as Apple. That's not what I'm saying at all. But I'm just saying that market share spread in this early stage tech is just, there's so much opportunity there, in my opinion. So that's kind of the macro landscape of things. But at the same time, I really do just want to say, for me, the alarm bells are going off, and it's because when I look at things like a 2018 bear market chart, right? Even just this dip below the 786 line. If you look at this pump. The pump, 21% or so for Bitcoin after falling below the 786, but that wasn't the end of the story. The raging sea for Bitcoin was straight ahead for 133 days. So it's just something I'm anticipating. I'm ready for. It may not happen. If it doesn't happen, I'm cool with that. I would love to see crypto exit the bear market right now with just this insane recovery, and we're off to the moon. That would be great. That would be fun. I just think we're not in that environment just yet, and there's a lot to be careful for right now. So that's my analysis today on crypto. Let me know your thoughts in the comments below. I appreciate all of you so much being here in this bear market as we grow and we get ready for the continued growth of this space. Hit the subscribe, hit that like. It means a lot to me. I'll see you in the next video. God bless.